Welcome everyone. My name's Ben. I'm with Stratas, and today we are breaking down the SBA 7A. What is the SBA 7A loan program? The SBA 7A loan program provides long-term government guaranteed financing used for working capital, equipment, business acquisitions, partner buyouts, owner-occupied commercial real estate, and approved franchise startups. The program offers some of the lowest total borrowing costs available, with more documentation requirements and a longer underwriting timeline than conventional loans. Essentially, it's just like a traditional term loan that you would get from a bank for your business or a real estate loan, but in this scenario, a large portion of it is backed by the SBA, 75 to 85%. This dramatically lowers the risk for the lender because it's still given out by a traditional bank or traditional lender, not the SBA directly, which allows them to fund more businesses and fund them at higher amounts. So some use cases for this loan, it's a very versatile product. We're looking at owner-occupied real estate. This is going to be things like office buildings, warehouses, factories, shops, storefronts, buildings where the actual business is occupying it, not an investment property, not residential real estate. The business needs to be occupying at least 60% of the building. And this can be for existing or new construction loans. And if it's new construction, the goal must be to reach 80% capacity at that 5-year mark. Business acquisitions and buyouts. If your business is looking to acquire an additional business, whether to diversify your offerings or take out some of your competition, the SBA 7A can fund that. And also partner buyouts as well. If you have a 50-50 partnership with someone and you want to buy them out of the business, you can get an SBA loan to do so. Working capital, essentially basic expenses of a business day to day, like payroll, utilities, supplies, different things of that nature. Equipment purchases like machinery, vehicles, some piece of equipment for your factory or warehouse. The SBA 7A can fund that. Expansion projects like opening up new locations, adding new products or services, funding marketing efforts, funding new hires, whatever type of expansion that your business needs, the SBA can fund that. And franchise startups. So if you have a proven franchise model like a Chick-fil-A or department store model, the SBA 7A can fund the startup cost for that franchise. Now, another type of startup that the 7A can fund would be an adjacent business startup. So what does that mean? Let's say you have a construction business that pours concrete on site, and you want to start supplying and producing your own concrete material, maybe for your business and for other concrete companies. Well, that would be an adjacent business to your primary concrete company. And that would be another type of startup that the SBA 7A can fund. Funding range. So for the SBA 7A, we can do $50,000 on the low end and $5.5 million on the high end. Term lengths are going to be 10 to 25 years. If it's anything that doesn't involve real estate, it's going to be at that 10-year mark. If it does involve at least 60% of real estate, it's going to be at the 25-year mark, meaning you can use this for a mixed-use loan. So let's say you're going to get a loan for $1 million, and 80% or $800,000 of that loan is going to go to owner-occupied real estate, meaning the other $200,000 could be used for working capital and also packaged into that 25-year loan. So imagine getting a 25-year loan at a fantastic interest rate for working capital. That's pretty much unheard of. Interest rates, so the rate is going to be prime plus margin. At the time of shooting this video, the current prime rate is 7%, and that plus margin is going to be around 1 to 5 additional points, and that's going to be an APR or annual percentage rate, meaning the interest is going to be charged on whatever the remaining principal balance is that year, usually on an amortized schedule with a fixed monthly payment. So at the beginning of the loan, you're going to be paying a lot of interest and very little principal, but by the end of the loan, you're going to be paying almost all principal and very little interest. And as one goes down, the other one rises and fills its gap, so the monthly loan payment always remains the same. And the DSCR, debt service coverage ratio, essentially how much more free cash flow compared to your total monthly payments do you need to have? And for the SBA, we're looking at a 1.15x to 1.25x. So let's say we take a DSCR of 1.2x. Your free monthly cash flow, meaning your cash after your expenses, is $100,000. At a 1.2x DSCR, 100,000 divided by 1.2 is 83,333. That means $100,000 is essentially 1.2 times the amount of your total allowed monthly payments, which is 83,333. So let's look at our high level example. XYZ business averages $300,000 per month in revenue. Assume the business produces $65,000 per month in free cash flow after expenses, after owner pay, and before debt. SBA global DSCR requirement is 1.2x, so free cash flow divided by 1.2 equals max monthly payment amount. $65,000 divided by 1.2 equals $54,167 in allowed monthly debt service. Now, using a 10-year SBA 7A term at a prime plus 3%, that's that prime rate plus margin, and at the time of making this slide, it was 8.5%. So the total APR rate is going to be 11.5%. So at an 11.5% APR for 10 years, that $54,167 per month in total allowed debt service will give you around $975,000 in max funding. So adding the fees, the guarantee fee of 3.5% of the guaranteed portion, meaning the part that the SBA is going to guarantee, that's 75 to 85% usually. In this scenario, 75% of $975,000 equals $731,250. So the guarantee fee, 3.5% times $731,250 equals a fee of $25,594. Third-party costs, appraisals, filings, and packagings roughly equals about $8,000 in this scenario. So the total estimated cost before interest is $33,594. In simple terms, $65,000 per month in free cash flow will give you $54,000 a month in allowable payments, supports a loan of $975,000 at an APR of 11.5% on a 10-year term. Qualification. So there really isn't a minimum universal credit score for the SBA 7A, but these are our qualifications at Stratas. So we want to see a minimum credit score of at least 600. We want to see the average monthly revenue at around $35,000 per month, and we want to see you in business for at least 3 years. The application process, if you've watched any of our other product breakdowns, you'll notice that there is quite a few more items on here than normal. So we have our first 3 standard items, which is going to be company and signer information. So we have basic information about you and your business. We're looking at addresses, contact info, the business start date, the EIN, your social security number, very basic standard stuff that you should know off the top of your head. ID and ownership verification, front and back of your driver's license, and an EIN document or articles of incorporation to verify your ownership of the business. Last 6 months of your bank statements, existing loans if applicable. We need to know if your business has any existing loans because that's going to affect that debt service coverage ratio. Last 3 years of personal and business tax returns, a personal financial statement, which is going to be the SBA Form 413D, year-to-date profit and loss balance sheet, essentially just your year-to-date P&L for your business, and some additional items depending on the use case, acquisition information, all the information about the business that you're going to acquire. If you're going to buy commercial real estate, we're going to need the real estate documentation, things like title work and inspections, just standard stuff that you would normally be used to if you've ever purchased a piece of real estate. Franchise documentation, these are going to be things like the franchise business model, locations that are already successful with this franchise model, and a breakdown of where you plan to open your franchise location. Timeline. So this is something to also be aware of for the SBA. It's a much longer timeline to close. If you were using our revenue-based term loan, you would see 24 hours on the low end, 72 hours on the high end. Here you're looking at 45 days is the quickest, and I really wouldn't bet on that. I would say almost every loan is going to be at least 60 days to close, and then 90 days on the longer side, depending on how complicated the deal is. Often it's involving real estate or a business acquisition. Conditions to be aware of. Number 1, collateral. The SBA will often require collateral or ask for it if you have it. It's not going to be a set proportion on the value of the loan compared to the value of the collateral, but they will take whatever you're willing to pledge. Personal guarantee. Anyone that owns at least 20% of the business or more is going to be required to sign a personal guarantee. So if the business goes bankrupt, you personally are still liable. Interest rate adjustability. So a lot of these loans are going to have an adjustable rate. Some will be fixed in certain scenarios, but a lot will be adjustable, meaning that after 3 to 5 years, the rate can adjust to whatever the market rate of the day is. So if you got this loan during the beginning of COVID, you would have gotten a fantastic interest rate. But over the course of the last 5 years, it could have recently adjusted to a much higher 2 to 2.5x of what you locked down during COVID. So that's something to be aware of and plan for in the future. An early repayment policy. First year is 5%, second year is 3%, third year is 1%, meaning 5% of the total value of the loan. So if it's $1 million loan, you could be looking at a $50,000 penalty if you sell within your first year and you repay early. This is designed for you to hold for the long term, not to use as a quick flip investment property. Fees. So broker fees, we actually don't charge an origination fee on this. We get a kickback from the lender, and the lender is going to have a standard 1 to 5% in closing costs on top of that guarantee fee of 3.5%. So that summarizes the SBA 7A loan program. Honestly, my favorite product that we have here at Stratas. It's so versatile and the terms are absolutely fantastic for the borrower. If you would like to apply, scan the QR code or visit stratusfinancial.com/SBA-loans to learn more. Fill out the form and talk to one of our senior brokers, and they can walk you through all the steps you need to do to apply for this loan and how it can work for you. My name's Ben. I'm with Stratas. Thank you for watching, and I'll see you on the next one.